Well, government leaders, regulators and decision makers across Africa recognize the success of private equity in growing companies, creating jobs and developing infrastructure. They're actively considering ways to encouraging flows of capital, both international and domestic, into private equity. Joining us to discuss private equity investment in Africa is Jeff Leonard. He's the chairman of EMPEA. Thanks so much, Jeff, for joining us this afternoon. Well, with a slowdown in global economic growth still very much on the cards, how has this impacted the industry broadly speaking, and so too the raising of funds to be invested in markets like South Africa, but then your frontier markets like Nigeria, Kenya, Ghana, etc.?
Well, certainly it has been a difficult time for general fundraising because across the globe investors are constrained and reallocating their portfolios. At the same time, it's a good time to have capital, and those firms that have been in the market for many years and had success are generally able to, with a little bit more effort here, generally able to raise good funds. It is a terrific time to bring capital into Africa in particular, because even though, for example, in South Africa where you have slower growth overall, there are new sectors and new opportunity areas such as consumer products and sectors such as the energy sector, which are growing because of just strong demand even in South Africa.
Generally speaking, Jeff, the reason I'm leading up to something here. I was watching a football match the other day between Sunderland and Newcastle. Sunderland in the north of England, of course, and they're sponsored by an organisation called Invest in Africa, which I found absolutely fascinating. Without getting into too many specifics, we'll do that later on. What's the appetite in Europe and the United Kingdom, for example, for investment in Africa?
Well, I think it's growing in general. Obviously, in Europe and particularly in the UK, there's a strong affinity and knowledge about certain countries in the region, such as South Africa. The appetite is growing as the opportunities for growth and new investments in Europe and in the United States have slowed. But I do think the appetite is increasing. We can see that since 2005 to 2011, a strong shift and increase in overall portfolios of institutional investors, more and more going to Africa, now in double digits of their portfolios.
From your experience as an association that deals with private equity players, I mean, to what extent is the perceived risk in Africa generally greater than the actual risk?
Well, there are risks everywhere we go, and many of us in the private sector see government or changing government norms and regulations and concerns as a big risk. But our job is to find long-term growth sectors of the economy that will grow somewhat independent of government and to make good long-term investments. The managers and investors from EMPEA, Emerging Markets Private Equity Association, are growth capital. So we're looking for businesses that need capital to grow. And often they need capital to grow because their banking relationships are tight. They can't get new access to capital. And as their markets are growing, they actually need more capital than they needed in the early stages when they were smaller. And so it presents a great opportunity. As you can imagine, one of our challenges as managers is to learn how to manage and mitigate risks and provide our investors a really good long-term return without facing or confronting head-on some of the big risks in the marketplace. Obviously, in Europe today, there are great risks associated with slow growth and restructuring and banking challenges, and so there are, as I said, risks everywhere.
Jeff, what are the hotspots, both geographically and sectorally? I mean, Alishia was talking about frontier markets as compared to established markets like South Africa, Egypt, and Nigeria, places like that. So geographically, what do you like, and also which particular parts of the economy do you like?
Well, obviously the growth stories in recent years, in the past decade, have been China and India, and to some extent Brazil and other of the so-called BRIC countries. Increasingly, though, those markets have a lot of capital, valuations are high, and growth is slowing. I think, and many of my colleagues agree that at Emerging Markets Private Equity Association, that Africa presents an area that still is underinvested, and there are strong growth areas. My own firm, Global Environment Fund, which has been investing around the world since 1990, finds Africa to be the most attractive continent on the world. And the simple way to think about it is the growing, strong need that growth economies in Africa need for electricity and energy. You in South Africa this year are facing a challenge of perhaps up to 1 or 2% of GDP growth not being achievable by companies because they can't get adequate and reliable electricity supplies. So wherever I see that, where I see the lights going out, I see concern growing among the population for clean water services and environmental services in general. Those are areas where we can move in and find great South African businesses that need growth capital, and we can help them to then supply needed social goods and services in a growing economy.
While you identify the opportunity, I mean, how do you rate the willingness of African business to work within the structures set up by private equity investors in order to grow their business?
Well, it varies. A lot of our challenge or our opportunity is to build strong relationships with businesses we always say that if you're coming in from outside of Africa and bringing something, you need to bring something more than money. You need to bring more than portfolio capital. So in my business, we spend a lot of time talking to companies about the domain expertise, the new technologies, the access to new markets, the business models, sometimes even down to operational capacity, which you can then help a company grow faster, not have to reinvent the wheel, so to speak. For example, we've been talking to a company in the Johannesburg area, in the broad area of waste management services, and by bringing in experts from around the world who've experienced these industries for decades, we've been able to almost instantaneously help them think about new business practices and ways to deliver a better service at a cheaper price. So that's a lot of what it is to make sure we have a mutual commitment and mutual partnership to understand that we're going to grow together over a long period of time. I often say to people, by the way, that some of our private equity investments, because we are long-term investors, I'm with, as a close-in a colleague of theirs, almost as long as I've lived with my children in my household. So you really have to have a great partnership. That's what it's all about. Anything that is just dependent upon a strict written word on a legal document but isn't a good, strong, organic partnership in private equity long-term isn't going to survive as well.
Jeff, finally, just before the financial crisis, private equity, for a few years, in fact, was flavour of the month. Everyone was setting up private equity funds, an awful lot of money going into an awful lot of places. Yeah. Then came the financial crisis. It was almost as though private equity, like a lot of other businesses, went into its shell. Is it coming out of its shell now? Clearly it is.
Yeah, absolutely. And we didn't really go into our shell as much as the whole economy and everyone around us kind of went into slow motion, and so we needed to accommodate to that. But if those private equity firms that have been around for a long time and well established have spent that time to deepen their roots and their contacts, we hunkered down to an extent and built greater value with our portfolio companies. I can tell you that the investment companies that we owned at the time of the financial crisis, we spent an enormous amount of time trying to insulate them and help them, build them to be stronger when things really start up again and they can grow again. They'll be stronger and better prepared than ever. So we think that, as I said at the beginning here, it's a great time to have available capital everywhere in the world, but notably in Africa. Small and new and emerging growing businesses need access to equity capital. They don't get as much debt capital in the lower middle market as they do, as they can get into the large area. And to us and to our members at EMPEA, Africa is a growth market where there's just a great opportunity to look out 5 or 6 years and say, let's build something together. And the other point I think that we've all much more focused on today than only a few years ago is the Pan-African nature of the marketplace. South Africa, Nigeria have always been looked at as somewhat islands, and then you've got smaller pockets of the East African economy and so on. But increasingly today, if you think of the marketplace of Africa, sub-Saharan Africa, 900+ million people, it's a tremendous opportunity.